So if you're a trader on the path to finding profitability, you have probably heard the term a setup. Finding a setup, finding a playbook, finding a strategy, right? Well, I'm here to really break down what that means, right? It's easy for me to just spew the word setup out there and expect for you to know what that means, but let's take some time into this video and dive in and actually dissect what I mean when I say that. What is going on, guys? Welcome back to the YouTube channel. My name is Kyle Williams. I've been trading for nearly almost 9+ years now, and now nearly over $7 million in trading profits. And I am here today, like I said, to want to talk about, and dissect what an actual setup is and what it means, right? What is it when I say that? What goes through my mind? Because what goes through my mind gets me profitable. First off, I think of, again, playbook, strategy, really the essence of an edge. And again, for what an edge is, that is something that is, in my opinion, repeatable, predictable, and ideally, obviously, profitable over the long run, right? This isn't just this one lottery ticket trade that you got lucky on. This isn't this once in a year kind of full moon kind of play. This is something that you can repeatedly play over and over and over again that happens across multiple different markets, maybe multiple different stocks, that has the edge there, okay? Now, beyond just that, we're talking about, and how I like to talk about, is criteria, right? And this is a very easy way to prevent yourself from overtrading, from boredom trading, or from revenge trading, is if you have criteria, which is what the setup should be based on, and part of that criteria is how to enter or when to enter the trade or the setup. If you can follow that, and again, it's much easier said than done, but if you can follow that, you remove a lot of the trades you shouldn't take. I get the question all the time is like, Kyle, how do you stay so disciplined, or how do you not revenge trade, overtrade? How are you able to do that? I have a simple rule. If I don't have a setup in front of me, if I don't have a list of criteria that fits that bill and that particular stock I'm going to trade, I don't take the trade. That simple. I don't care what I think. I don't care if the stock looks kind of good, and if I want to gamble a little bit. I am brutally honest with myself, and I say, regardless of what I think, are these list of criteria in front of me in the stock I'm looking at? And if they are, great, I'm going to take the trade, and if they're not, I'm not. It's that simple. It's that black and white. It may be difficult for some people to do, and it certainly took me a while to get there, but that's the rules you got to play if you want to be an efficient and disciplined trader. Okay, so without further ado, let's jump into some of my favorite setups and what the criteria are that tell me, hey, I'm going to take this trade, and if I'm not, then I'm not. Okay, and the criteria tells me that. So first off, let's go over what my favorite setup is, the first red day. We'll go over a couple examples. First thing is, the most recent first red day I captured is Fannie Mae. The most, I would say, the top 3 to 4 pieces of criteria for Fannie Mae, for a first red day is, 1, you need at least 2 or more days of running. And by running, I mean the stock is going up, okay? At least 2 to 3. And on top of that, you need, over that period of 2, 3, 4, 5 days, I see 2, 3 minimum. It could be, I've seen stocks run as many 8, 9 days in a row. But among that run up, you need a % of level of extension. It doesn't mean anything to me if the stock's gone up 10 days in a row, but it's only up 10% over that period. It goes up 1% a day. I don't care about that. That's not where the edge can rely on. I want something that runs up over 2 or 3 days and is up 100, 200, 300, 500%. Something that is very overblown and not over one day, but over multiple days. Those are the 2 massive pieces of criteria, right? That if you don't have those criteria, I don't even get interested, okay? Because you look at Fannie Mae here, and Fannie Mae has some choppiness, but really when the true extension comes, it's got 1, 2, 3, now 4 green days in a row, and you can argue it's ran from about 450 to nearly 8, so not the 100% mark, but if you look at when the run actually started, back down here at 250, yes, there's some red days in between, which again, gives some nuance to the first red day setup, so it's not perfect, there's a little bit of an art to it. But given there was no real serious consolidation in between these small days, you could argue, hey, the really good blow-off run has happened in the last 4 days. That's only up, call it 50% or so. But the run from the entirety of it has started from 250, and that is up a near 200% move. So when you tie both those together, it does meet the criteria in some way or fashion, okay? It's not perfect, but it's there, okay? Now, other small pieces of criteria that help me decide how good it is how many times does it go red? Well, like I just talked about, there's a small red day here, there's a couple red days here, even here it kind of slightly goes red but holds. But these last, again, what's more important is when it extends itself, these last few days here, it actually has never even tapped or touched red on the day. That's where the entry signal comes in, or the entry indicator comes in. So for me, now I know, hey, if this thing's gonna actually go red on the day for the first time in 4 4 days and 50% lower, I am going to take my chances that, hey, there might be a bigger sell-off happening here. And lo and behold, on the day it does go red, which is around $7. It ended up selling as low as like 580s, a whole $1.20 cents a share lower. Okay. Now it's very simple. Again, for the scope of this video and for more in detail, we have plenty of webinars and video lessons on clovertrading.com to get access to that for more of the actual how the trade plays out and managing it. But that right there is I have at least two indicators, or two not indicators, but two criterias, which is it extended enough percent-wise, and has it run enough days in a row? And then I have at least one entry signal of like, hey, if it goes red, I should get short. Now, you can get much elaborate with it. Not all red days are created equally. There's some times where maybe going red isn't enough. You need like a new morning low, or you need the first time it morning spikes and stuff super hard, or the first time it maybe gaps up, right? Maybe there's sometimes tickers that run, they're always going red, and maybe the first morning where it actually doesn't go red is the first time it actually will stay red instead of coming back. Again, I'm babbling on, but understand the framework here, which is like a list of set of criteria, and then possibly a smaller or shorter list of what it takes to actually enter the trade. And if those things don't happen, I'm not taking the trade. Let's look at something like a breakout. I would love to kind of give you another ticker, but honestly, Fannie Mae is another good example of a breakout. And I can confidently say that because I also, similar to how I made money on this red day, I also made money on this breakout. So let's talk about criteria of a breakout. Personally, I like a resistance level. Now that's in essence, what a breakout is. For those who don't know, it's when a stock wants to make a newer high over a previous level, breaking out over that level. Now, the mistake a lot of, I think, newbie or beginner traders make is that they will buy a breakout over any high. It could be last Wednesday, it could be last month, it could be a year ago. They don't care. They're just going to buy it because the stock is making highs. That's okay. That's all fine and dandy. But for me, I like to know and have a little more oomph behind it, right? A little more conviction that what I'm buying is actually going to maybe give me a better chance than at random of the breakout working, right? So the resistance levels that I look for, or when they actually think the breakout is happening, is already from a previous level. So I might actually let a ticker run and completely miss the move, not even want to be a part of it at all. But once it sets a high, then I will be watching for that high to break out, and that's the breakout I want to buy. And I'm not even talking about Fannie Mae here, and we can go over that, but let's talk about back in 2023 here, okay? Back when Fannie Mae was only at 80 cents. I missed this move completely. I wasn't even a part of it, right? It went from 51 cents all the way up to 90 cents again. Criteria of a first red day, not to go off topic, but 2 big days in a row, up from 50 cents to nearly $1. That's enough 100% move. Beautiful, almost way more than I would have expected red day, okay? But besides that, it now sets a high at 89.90 cents. Months later, right? 1, 2, 3, 4 months plus later, it's coming back, and now it breaks out over this 90-cent level on day 2 of this run. Not only that, but increased volume, okay? So one, a previous level has been set from a previous run with good volume. It is consolidated well, and it doesn't have to be 4 months. It could be 5 days. It could be 3 days. The point is there's some kind of period of consolidation, typically the longer the better. And then when it reapproaches that breakout, there is also above average volume to kind of prove that, hey, I'm not the only one joining this breakout. I probably wouldn't even like this breakout if it was only trading the small volume. I want something that actually shows I'm not the only buyer, in this kind of trade. Now, typically on top of that, some traders are a little picky. I'm not necessarily that picky, where they also, as an indicator, want news. There has to be news involved. That's not always the case. I've seen many good breakouts work without news, but again, to gauge how ideal it can be, you can add news in there. So very similar to first red days, there's only 2 or 3 criteria, right? Previous run set on good volume, some form of consolidation in between that. When it reapproaches the breakout, the previous level for a breakout, it also has similar, if not at least above average volume. And again, if you want to be specific or be more ideal, you can add maybe a news catalyst to that, or at least have some kind of news, okay? And from there, the entry signal is very similar to a first red day, where I have to see it go red. I have to see the breakout work. Some traders like to get in early. Like some people like to buy this before it actually breaks out. Very rarely I'll do that. I have tried it before and it has worked, hasn't worked. But for me, I love waiting for the actual breakout to happen. And so the moment on this day, on December 26th of 2023, the moment it starts trading at 91 cents, 1 cent above that breakout level, I'm buying that breakout level and looking for it to work. And what do you know? It goes all the way up to about 115 that same day. And yes, it did end up dying for a first red day. Same kind of idea the next day. It's not always the case that breakouts lead to a really good red day. But again, it's a list of criteria with a list, or at least one form of entry signal, and I have a trade. If it didn't do those things, I'm not taking a trade. It's a very, very simple but not easy way to whether you can say or follow those rules. And if you can, you're going to avoid a lot of trades that don't actually work out. Okay. Now, these are the two most basic and probably most popular setups among small caps. So maybe you didn't really learn anything new, and so that I apologize. But again, this is also your chance where you can get creative. I've heard of traders who maybe use more indicators than I do. They'll say, when the 5 EMA crosses the 20, and then this is, you can get insanely creative again if you have actually found an edge of that setup repeating over and over again. But again, it's not enough just to say, oh, it's got these 3 indicators and this entry signal, so I'm taking it. It's almost like the indicators come from the edge, right? The edge exists and the indicators just tell me how to find the edge. It's not like I'm just going to randomly pick 3 indicators in an entry signal like I've been talking about and just hope it works. These are setups that have worked well beyond my existence as a trader, and I've just kind of picked up on them. And this is why many traders love to backtest. They love to find edges that prove it for them. But once you've kind of cultivated or found an edge that you think works, and maybe you're just testing to find one out yourself as a newer trader, but to really kind of structure it and have some sense of know-how to that edge, that's where the indicators that you need to have it show up, and then what the entry signals look like, and then from there you can create your trade plan and move on from there. And that's how you actually then are able to repeat that edge over and over and over again. Okay, so hopefully that helps. I know it was a very simplistic video. Some of you might have not been too impressed, but again, if you struggle to really stick to trades and know when to take trades, this is your blueprint, in my opinion. 9 years into this, I do this every single day. I look at a stock. Does it have indicators I'm looking for in any possible setups that I'm looking at, not just breakouts or first red days? If it's got them, great, and it has an entry signal, I'll take it. If it doesn't do that, there's been plenty of days I don't take trades. Why? Because this type of process doesn't pop up for me. So hopefully that helped. Again, make sure to like and subscribe, and we'll see you guys in the next video. Thanks so much. Bye.